Hey everyone, it's October 12th. Hope everyone's doing well. By popular request, I'm back with an updated analysis of DJT. Quick shout out to my friend Panic in DC. Thanks for the inspiration and support. Let's dive into this and make some sense of this chart. So we can see here, this is the weekly time frame. We have a 50-day moving average red. We have a 100-day moving average blue. And we have a 200-day moving average that's green. Okay. So we could see the inception of the stock that once we got trend alignment, we had a rising 50-day moving average, rising 100, and then confirmation with that 200-day price anticipating was seeing higher highs and higher lows, right? As that 50-day moving average started to flatten to decline, started to see a new sequence of lower lows and lower highs, and that 100-day moving average starting to follow through, and then confirmed by that 200-day moving average. And that's what takes us down to this 2023, where we really built in a big base. And this is our first retest of the base since we had previous trend alignment. Okay. So when we had this retest here, back here, the 50-day moving average declining. Here, we had the trend alignment on the weekly, where you start to see the 50-day moving average, 100-day moving average rising, the blue, the 50-day moving average rising, the red, and then right up in here getting that confirmation as the 200-day starts to flatten out and then gaps up and starts to rise. So now we see here recently the 50-day moving average was acting as support, starts to flatten out, starts to decline, and we start to see a sequence of now new lows, right? And lower lows and lower highs. So let's dive into the daily time frame now and make some sense of this here. I just want to get rid of these pivot points here. Okay. So the daily chart we just talked about, we're bringing in on the left-hand side here, and this is the entire trading year of the stock. Okay. So this is all of 2024 right here. And we could see that buyers were in control in the beginning of the year. Buyers were in control by this gray line, which is the year-to-date VWAP. So you can see the average buyer was in control, and it's acting as support. And then we made a yearly high. So we put an anchored VWAP at that yearly high. We see that this was the first new low that we made underneath that year-to-date VWAP. Buyers defended it at the 200-day moving average and pushed it up right into that year-to-date VWAP high, right? This is where sellers were started to see that sellers were in control of this intermediate trend, okay? As this happens, the 20-day moving average is flattening out to declining as well. So the 20-day moving average flattening out to declining in this area could have maybe hinted that this new low could be in play, because we're not having no trend alignment. We're at a 50 and 20-day no longer. So we get a bounce into the year-to-date VWAP. Sellers start to fuel up and they sell off the stock, retest it again, and they're regaining control. All right, now confirmed by the break of this neckline right here, confirmation of sellers in control. We have that declining 20-day moving average and declining 50-day moving average. Okay, so right now, this 50-day moving average is declining, and we're having a rally into a declining 50-day moving average. History says that when the 50-day moving average is just declining and we have rallies into it, like Brian Shannon says, it's guilty until proven innocent. So ideally, this is just a bounce in a downtrend. Now, it could be constructive and could lead to bigger moves and bigger things. So let's dive into that and talk about it. So to recap, the year-to-date VWAP high is this red line. Okay, the 50-day moving average here is declining, and the 20-day moving average is starting to flatten and rise. So we're gaining some points on the bullish perspective of a flat to rising 20-day moving average. Now, the next question is, well, there's the 50-day, we're rallying it, it's declining, it is starting to seem like it's starting to flatten out and curl. What's it going to take to get that 50-day moving average to flatten the rise so we could start to see trend alignment and see some fat tails in these trends? Well, that will bring us to this vertical line here on Friday, August 2nd. That's 50 days ago. So we have 50 days of trading data in this rectangle here. Okay. So note that the next 30 days of trading and some more, right? Because that's the 20-day. So what happens to price over the next 30 days? Well, it starts to decline at a pretty significant slope, at a pretty significant pace. So if we go over the next 30 days, the lowest price it goes to is down 48%. So even if we have a sequence of higher highs and higher lows, right? So maybe could be our wave one here in a potential chart construction. So let's dive this over into this intermediate time frame now. Okay. And I'll leave this up on dual screens so we could see that this is where that VWAP is on the daily chart and on the intermediate time frame. This is full disclosure. I did not take this trade, but I was setting up as I saw this aggressive sell-off, this 5-day moving average. You could see marked by the red cloud. When it's declining, these bounces often fail. Okay. And this is the work of Brian Shannon. Again, just want to give credit when it's due. So this is when these bounces with the declining 5-day moving average often fail. So I start to look for these areas, let the institutions do the dirty work, rally up, look for it to pull back, and then go and have a stop in this area, because I know if it's going to fail, it's most likely will continue downward. And many times, I bet you the 20-day moving average was declining in these areas. Now, as we discussed, what's happening? Well, the 20-day moving average is starting to flatten out and rise. And it will continue to rise next week because the data will drop off over here. So we've got over the next 6 trading days, a week and a day, the data continues to fall off. So it gives the opportunity for that 20-day moving average to rise. So from a trend perspective, if the 20-day moving average is already rising, the 50 days declining, and the moving average data is going to start to fall off, what would happen in a pullback? Would it be really, really detrimental to this current intraday trend? I don't think so. And actually, I would be preferring for this to pull back into this 18 area to $20 area. And what that could potentially look like is something like this, is maybe this rallies back up, gets people to chase again after a huge move, pulls back, bounces, and we start to get that failed move back into this $18, $19 area. All right. And this isn't a prediction. It's just a potential scenario and a preferred area where I would like. So looking for this pullback down into this 21 area would be the first key level of interest. Okay. $20 is going to be a next key level of interest, and $19 is going to be the next key level of interest. And you can see there's multiple VWAPs right here. Let's take this one out. All right. And just like I discussed before, earlier up in this chart, setting up stops, actually, this was, in full disclosure, like I said, I missed this. I was looking for this to rally up. I started to see the tides turn on the 5-day moving average. Figured I'd get up on my surfboard and see if we could ride the wave. If you get there too early, right, what happens? You stand up on your board too early, you're going to get taken out by a wave. And you don't know if you're riding a good wave until you're actually on it. You can't say, hey, that's a good wave, let's go surf it. So this is where we're in that anticipation and we're looking to participate. And, it didn't pull back as deep as I'd like to, but ideally, just a little bit off on a tangent, but we'd put a VWAP at this day right here. So that's Monday the 30th, right? Don't chase the gap. Don't chase this price action. Wait for the gap to settle down. Enter here, right? Or ideally, like my flag right here was here, and then I could have put a stop in that area right there 14, even if you buy on the strength here on the close, 1470 with a stop at 1374, 1368. And that would have actually having risk management strategy, and you would have caught this fat tail and, rally up, let it settle, probably take some profits in there, accept the risk. Once we break this high, move your stop up to this area, rallies back up. Once it breaks this high, then just move your stop up to this area, right? Rallies up, breaks this high. What do? Move our stop up here. Rallies up, breaks that high. What do? Move our stop up there. So now that brings us to a potential scenario. If you're a trend trader like me, now you're bringing up another portion of your stop and your position here. And so if we start to break this 2470 area, then we could potentially see where the bidders are. And, if you just rode this wave from $14, even if you $18 and selling off at 26, are you going to want to restart purchasing at 24? You're going to want to restart purchasing at 23, right? So ideally, I'd be looking for a potential area to come back, maybe in this 19 area. And you can see resistance, could then potentially pull back and start to act as support. So then we could carve out something like this, where this rallies up, settles down, and then gets going. So if this was to come fruition, this VWAP would start to look something like that, right? On Monday, we slap a VWAP on Friday, right? Which will be our 2-day VWAP. Tuesday will be our 3-day, but just monitor that and potentially look for this to act as, if it's acting as resistance, start to turn tide, and then we can look for this to act as support, and then put some type of calculated risk, with some type of idea, stop 23, stop at 21, 23 entry, stop at 21 for maybe the next potential push. I'm going to take this here and just so it looks, so that would pull back like this, back into that 50-day moving average area. Pulls back into that 50-day moving average area. The 20-day moving average will start to catch up, right? And that could potentially now be all these traders' alerts. Oh, pull back to a rising 20-day moving average. We talked about that 50. The data is going to start to drop off. So in a couple trading days, we'll actually be trading higher than we are, right? So if we look right here, this is where we're trading. So by how many trading days is that? Is about 10, so about 2 weeks or so, the data really starts to drop off. So if we pull back and rally up, pull back for 3-4 days, we have 10 days to let this marinate. And what I mean by that is that 50-day will start to look something like that. And then we have confirmation of this trend alignment of a flat to rising 50 days moving average, a rising 20-day moving average. On the intermediate time frame, this gold line rising 5-day. So that's trend confirmation. Okay. So let's delete all this jibber jabber and wrap this up here. So hopefully this was helpful. If you like this kind of analysis, please like and subscribe. Do this for the SPY every single day in the QQQ, and open for other chart requests. So hopefully this was helpful. Enjoy.